Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs, counting you down to the closing bell, and here to help take us beyond the bell, our global simulcast. Right now, joined by Tim Stenovec and Paul Sweeney, bringing together our Bloomberg Television, radio, and YouTube audiences worldwide. And Tim, this week, it's been a crazy week, but at the end of the day, this is about a market that seems to be comfortable right now with the economic pace.
Yeah, certainly the jobs report earlier today helping out with that. If we finish in the green at all today on the S&P 500 and on the Dow, which it certainly seems like we are going to do, it's going to be another record. A different story, though, playing out in the NASDAQ, where those tech high flyers are taking a hit, perhaps not surprisingly, as investors do get scared quite a bit with the prospect of higher interest rates, which certainly could be a possibility. At least that's a signal, Paul, that the bond market is sending us after a day like today.
Yeah, it's interesting, as we were just talking about, Tim, this has been a really busy week for the markets. A lot of economic data, a lot of earnings data. Earnings continuing to come in, well above expectations. Certainly the comps are easy versus last year with the pandemic, but really coming in strong versus the expectations. Generally pretty good guidance, although a lot of delta caveats, if you will. And then, of course, we got the jobs day today, giving a little bit of a backdrop to what corporate America is seeing.
Yeah, jobs data looking strong. Now all eyes trained on the inflation data for next week. How will that start to echo the concerns that maybe the Federal Reserve will step in here and start to make a move, while we still have that delta concern that is seemingly impacting commodities markets, maybe more than a little bit than the equities markets, Taylor?
And it really comes on a week, Romaine. We were talking about the David Costa note from Goldman, raising the price target to 4,700, 49 next year.
Yeah.
I'm loving this chart by Mr. Dave Wilson on our team. Jim Paulson out by 2025. He won 6,000 on the S&P.
Yeah, but then you had Bank of America's chief equity strategist, Joe Carey. She was on Bloomberg Television earlier this morning. She's got a 3,800 target on the S&P 500 right now, saying that it's just too many macro factors driving this. This isn't fundamentals, and you got to maybe pause here. That would be about a 14% correction from where we stand today. And where we stand today right now is 44.36 on the S&P 500. That's good enough for a record high. It's only up 0.2%, but that's good enough, up 7 points on the day. The Dow Jones Industrial Average, of course, sticking to that price weighting, 144 points, up 0.4%. I believe that is a record high as well. The NASDAQ down on the day, down about 59 points or 0.4%. And you take a look at the Russell 2000. The Russell 2000 finally getting in on the action, up 0.5% right now, 2247 and change. Taylor.
Yeah, let's go through some of the numbers on the week here. The Dow higher by 0.8% over the last 5 days. The S&P 500 up almost a full percentage point. The NASDAQ, the outperformer, despite today's decline of 0.4% over the last 5 days, finishing the week higher by more than 1.1%.
Yeah, and you guys, it's been interesting. We've been in the middle of this horse race of earnings. We haven't properly been able to do a sector level. Let's do it now as we have some calm amongst earnings on a Friday afternoon. For the radio audience, sector winners, sector losers. The winners is where we start. You would have guessed it, with yields up 9 basis points. It's banks, it's financials, and in some of the classic riskier sectors, materials and energy, that are up almost 3% on the day. We migrate, of course, down to some of the losers as we've seen yields rise. Some of the tech-heavy sectors have been selling off. Indeed, it's tech hardware, it's some of the biotech, some of the auto chip makers, of course, that are some of the losers, Tim, on the day. Worst performer off 1.3%.
One of the best performers, though, Robinhood. You know that I cannot go a day without checking in on Robinhood, finishing the day higher by close to 8%, rising 57% for the week. For those keeping track at home, that's higher, 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 lower, higher. The reason higher today, it said that some of those early investors who yesterday we learned were filing to sell almost 100 million shares of the company stock, they will not be able to do so until they get clearance from the SEC. So investors happy about that. Let's talk a little space. Virgin Galactic finishing the day higher by more than 5.8%. Hey, how does $450,000 sound for a jaunt just about 50 miles above the Earth's surface? Hey, for Cowen, it sounds pretty good. The company's saying the new ticket price versus $250,000, it highlights the rise of, quote, experiential or experimental luxury, I should say, among high net worth individuals. We got to talk about the decliners here. Expedia finishing the day down by close to 8%. I know you guys had him on Bloomberg TV earlier today, Peter Kern, the Expedia Group CEO and Vice Chair. He said, even though this isn't COVID all over again, when cases go up, when local governments change their recommendations or lock down, that changes things.
And Tim, that CEO speaking to us earlier and just saying, we have to learn to live with the virus. It's not going away.
It's something that we're increasingly hearing from public health officials as well. Also want to check in, speaking of virus, on Novavax, down more than 19.6% today. Said it was delaying U.S. submission for COVID vaccine clearance, guys.
Guys, let's speak about the virus and go cross-asset about that, because this is where it's been impacting commodities. I'm looking at, well, oil currently off by 1.4%. Worst week for oil that we've seen in 10 months. This is the reflection of the global concerns when it comes to the Delta variant. This is the worry about what's happening in China as well as here in the United States. So oil takes the brunt of it as well. Interestingly, we've seen commodities sell off in general. Iron ore having a terrible time of it of late as we continue to see the pushback in China of course, the commodity that helped make steel off by 2.75%. Steel, as I say, off by 0.7%. This is all in the spectrum of a dollar pushing higher. No wonder commodities are pulling down. Remember, gold having a pretty awful day today. And we see the dollar, your only element of green in your vertical that is the foreign currency board on the global macro movers. Dollar index up 0.5% as we see that labor data coming in strong. What does that mean in terms of Fed movement, in terms of push up in yields? And I speak of yields rising across the board in the UK, in Europe. And I know you were looking at them in the US as well, Taylor.
Yeah, shout out to our producer, Faith, where every Friday she tries to give me weekly yields. And today I nix her idea. And I say, unfortunately, on the week, it isn't showing much because all the action has been, you guys, on an intraday basis. Take a look. This is on the day. You're up 5, 8, 9 basis points, all on sort of that reflationary theme with some of the jobs day. Earlier this week, we were at a 112 on the 10-year. Tim, we're looking at a 130, a 195 on the 30-year as well as we march higher back up above 2%. And really, frankly, it's coming all on that jobs report, Tim, with really better than expected and what it means for, well, does it taper? Does it come sooner? And what does it mean for these markets?
Yeah, and what does it mean for the Federal Reserve? It's an interesting question. I put it earlier to Michael McKee, our international policy and economics correspondent here at Bloomberg TV. And he said, hey, keep in mind that 1 month does not change things significantly. This is 1 month, and sure, the revisions for May and June were really good. But as far as substantial further progress, it's further progress, but perhaps not substantial, Paul.
Yeah, I think what we're going to have to pay attention to in the upcoming data, maybe some of the high frequency data when you're looking at economic trends, is the Delta variant and what that means for getting people back to work. And again, we still have 7 million plus people that are kind of below where we were pre-pandemic, and it's going to be a challenge getting those folks back to work. But that's a focus, and the question will be the Delta variant. Is that going to really put a hinge?
But doesn't the Fed need to get out in front of this? I mean, this seems to be the conversation that you're hearing from some of the Fed members. Obviously, we referenced the Kaplan interview a little bit earlier. The idea here is that there is enough economic data out there for maybe the Fed to at least be a little bit more serious about, I guess, addressing some of that financial support, the monetary policy support, some sort of normalization here. And when you get a type of print like this with 943,000 jobs, that revision, of course, from the previous month, when you dig into that household survey data and you're talking about 1 million people coming back in the self-employed and part-timers payrolls, when you talk about that bump up in wages and then you fold in some of these supply chain issues and elsewhere, you have to wonder, when does that conversation start? At least publicly. We know they're having that conversation behind closed doors, but publicly, when do they start communicating that to the markets?
Start communicating maybe as soon as Jackson Hole. Meanwhile, of course, we see the federal side of the equation still going pretty strong in terms of the government spending. We're still hashing out some sort of infrastructure deal that was much smaller than the original planned. And is, get this, being thwarted by crypto? Who would have thought that Ethereum and in some way the spending of the federal government would intertwine and actually get sort of stuck, Taylor?
Caroline and I, I'll have to go back and check my grammar. We are going to host a show called Crypto and Munis Worlds Collide. Thwarted.
Well,
Munis have been thwarted because crypto gets in the way.
Well, who would have thought, to Caroline's point, that a part of the bill that, was really only a few pages of a 2,700-page bill would actually, derail this. I mean, we're talking like tens of billions of dollars out of a bill that costs hundreds of billions of dollars, tens of billions of dollars in revenue that this was supposed to raise in terms of
it's an important
crypto.
provision, though, too, and it was one that was just so broad. I mean, it was almost ridiculous. I mean, when you looked at it. So I think the idea that somebody actually saw this, flagged it, and the idea that now they have to sort of address this, and obviously they're going to have to do this over the weekend if they want to get it done. But, I mean, this is something that really was just so broad in nature, you just wonder how it even got there in the first place.
Yeah, and Romaine, I think the market's fully discounting that we're going to get this legislation across the finish line, and the question really just becomes, this broader spending plan that's still out there, and we don't know how much support that bill has, but that's going to have to be done.
And we should just point out the timetable on this. I mean, even if the Senate does get this through, remember the House is out. I mean, they're not even coming back to September. So I mean, we're talking about a pretty long runway here before this would ever get signed and actually start to be implemented.
Well, by the way, not a bad gig, right? Go back to work in September. Sounds pretty good right now. Well, that's going to do it for our cross-platform coverage today. Be on the bell on Bloomberg TV, Bloomberg Radio, and on YouTube. Join us same time, same place on Monday. Have a great weekend, everyone.